Okay, getting a little bit trickier now, but we're just going to do what we always do. So first of all, we're going to kick off, as usual, with this equity table. And we'll be getting good at the equity table now, and it'll help us relax a little bit in the exam. So 3 columns, year-end, acquisition, post-acquisition. Take anything that's in equity. In my simple examples so far, just share capital and retained earnings. So, okay, I'm going to take these straight from S's balance sheet date, so 600 plus 2032. We presume the 600 was always there, and then I just want the figures at acquisition. Its retained earnings were 1656. Okay, so that means that the post-acquisition must be 376. Then I add these two together, don't I? And I get 2256, and that's the book value of the net assets. I want the fair value, and it says the fair value of its net assets were 2280. So 2280 is the figure that I want, which means I've got a difference of 24. I need to see what that difference is caused by. Caused by PPE over 5 years. So 24 over 5 years times by, I only applied it 1 year ago, okay, and so 24 divided by 5, what is that? 4.8 is that? Let me just check. 24 divided by 5 is 4.8. Yep, it is indeed. Okay, so it's 4.8. Leaving me with, on the SFP then, 19.2 PPE, which I'll need to go and put on now. So I go on and put on plus 19.2, and then I just add this down. So 376 minus 4.8, and that gives me 371.2, and I know I'm going to need that. So carry on though, Goodwill, fair value of consideration, and then I need to check what sort of NCI am I doing. So NCI, what is it? Fair value of NCI. So fair value of NCI, he actually tells me what it is as normal, 963. Also look, fair value consideration, he acquired it 1 year ago for 1463, so I know that that is 1463. All I want now then is the fair value of the net assets acquired, and I can get that from here up 2280. So before any impairment, what was my goodwill? So goodwill before any impairment, if you add all that down, you should get 146 before any impairment, okay? Now, made it a bit trickier. Impairment, instead of telling you, I've told you what the recoverable amount was. So let's try and calculate this then. The recoverable amount was 2677. Right, so I'll do it now here. The recoverable amount of S as a whole is 2677. Okay, and that would have been at the year end. Now, if I add these three down at the year end, what do I get? I get 600 plus 2032 plus 19.2. I get 2651.2. So my net assets would be 2651.2. Remember, this is at the year end, and this is at the year end. But what I'd also have is some goodwill. My goodwill at the year end is 146. Okay, is 146. So I've got S in at 2651.2 plus 146. I've got S in my accounts at 2797.2. But it's only actually worth, I could only recover 2677, which would give me an impairment, therefore, of 120.2. That would be my impairment, because I've got it in my accounts at that, only worth, if you like, it's what its recoverable amount is, only worth 267. So I need to reduce this by 120.2, and I reduce goodwill first. So that's how you calculate your goodwill working. We'll have to get good at that, won't we, when we get given that. So 120.2. So that is goodwill then of 25.8. And I can go put that 25.8. I can kick off my group accounts. Goodwill 25.8. So a little bit tricky, but that's P2 for you. And we practice questions and we get good at it. Okay, so let's move on. Next we would do NCI. NCI, at acquisition. Use this figure here, don't we? We just drop that straight down, 963. Plus post acquisition. I just need to know how much I acquired, because I've forgotten. 60%, okay, which means NCI was 40%. So I'm going to drop into there 40%. So 40% of 371.2. So let me just have a look at that. 371.2 times by 0.4. I reckon the answer is 148.48. Okay. Now there has been an impairment, but I'm just going to add this up together at the moment. Before I do any impairment, so that comes to 1111.48. Okay, that's where we are at the moment. Then there'd be an impairment. Now, the reason I've done that is because I know the question. Now, have a look at the question here. It said H acquired 20% more at the year end before any goodwill impaired. So that's why I stopped, because I didn't want to take off the NCI impairment just yet. So, before I take off the impairment, I want to deal with this acquiring of 20% of S. Right. So, give myself some room. Further addition. This is what we call a further addition, because we already had control. So we're going from 60%, acquiring another 20% to go into 80%. So if you think about it, this further addition is from the NCI, isn't it? NCI is going from 40% to 20%. So NCI before the further addition, which was also before the impairment, was 1111.48, and I just acquired an extra, but that extra 20%, think about it, this is worth 40%, and I've acquired not 20% of NCI, I've acquired 20% of the whole. So I've acquired 20%, I've acquired basically 20 out of this 40. So I have in fact acquired half of that, haven't I? So 1111.48 times by the 20 over the original 40. So that comes to, what would that be? So put this in my calculator, 1111.48 basically divided by 2 is 555.74. Okay, so let me go back to my NCI working. 555.74 I've acquired, so that's the further addition. And then there is also this impairment, isn't there, of 120.2. So there is an impairment of 120.2, but they don't get all of it. They just get their share of that 120.2, and they will get 20%, because that's what will be left of it, which is 24. I'll call it 24, that will do, I think. Okay, and if we add all that down, if I can just sneak that in, I have got then NCI of 1111 0.48. Then I bought off them 555.74. Then there was an impairment of 24 as far as they're concerned, leaving them with 531.74 or somewhere close. Okay, so 531.74, that's what I'm going to put up here to NCI at the year end, 531.74. Now, I want to go back to where I got to here, this further addition. We acquired 555.74 from the NCI, okay? How much did we pay though? We paid and we acquired, so we acquired 555.74. How much did I pay for it? I seem to remember that was told to me in the question. I paid 537. So if I pay 537 and I got 555 worth of NCI, then I have made a gain, haven't I? So I've got 537 I paid. I actually acquired 555.74, so I've made myself an 18.74 gain. Okay, but we don't put that gain to the income statement. That gain goes to reserves, and so I'm going to put that to reserves. The 18.74 will go to reserves. So you could put it to other reserves. I'm going to put it to retained earnings so that I can finish off the question. So retained earnings, I want all of H, which as normal is the 4358. Don't forget now to add on the gain on further transfer or further addition. What was it, 18.74 gain I've made? Yeah, 18.74. I don't want all of S though, I just want the post-acquisition of S. So that would be 60% left of that. So let me get to my calculator there. 60% of 371.2 is 222.72. Then finally the impairment. The impairment was of 120.2. I gave 24 to the NCI, so the other 80% of 120.2. So let's just put that in the calculator. 120 times by 0.8 is more or less 96. So if I take that 96 impairment here, and then I can add it all down. Remember, this is the start of another working there. So let's add that down. It's getting messy. 43, don't get messy in the exam. Leave plenty of space. But 4358 plus 18.74 plus 222.72 minus 96. I get 4503.46. So I can go put that in. 4503.46. Share capital, always a holding company, 1120. And then the other net assets, let's just add all that across. 3478 plus 2632 plus 19.2. We're going to have a slight, well, 6129.2. We're going to have a slight difference here due to rounding. So 6155. And if we add all this down, what do we get then? 1120 plus 4503.46 plus 531.74. That comes to 6155.2. And I think the 0.2 is just the goodwill that the impairment that we rounded. But that's how it's done. Now, as you can see, that is now tricky. You're now well into proper past exam standards. So what I would do is I'd revise this, I'd go and redo this video a few times, and then check out the next illustration where we go through another one again.